Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Quite an interesting decision coming out of the US Fed now. It appears that the tapering has now been put on the back burner as a waiting for further evidence of growth coming through in the US economy. There was sort of thought that once the US government got back up and running after the sort of partial shutdown, that the tapering would be announced to sort of take place pretty sort of quickly. That now transpires that's not going to be the case, and it's looking like at least early part of 2014 before they start to kick in. So low interest rates here to stay for a little bit longer. US equities are certainly trading pretty well on the back of that. A little bit of a surprise coming out of the ECB last week with a very much surprised cut in interest rates by a quarter point. We think that's just trying to sort of head off the potential for deflation coming through in the European economy. You've already seen what's happened with Japan over the last sort of 15-20 years with potential sort of deflation out there. So the ECB are very sort of concerned about that, and that's why they've cut rates there, just trying to encourage growth coming through. It certainly seems to be as though that they're sort of having some impact out there. Most European economies now are showing a few tentative signs of growth. Some are showing some reasonably strong growth going forward. Certainly the equity markets in Spain and Italy have really been hammered over the last sort of 12 to 18 months, really showing some pretty decent gains over the last 3 months. So now just be interesting to see if that can be sustained going forward. Certainly coming from a pretty low base, it looks like Europe could be the next sort of hot spot, and some pretty reasonable gains over the next sort of 12 to 18 months. Here in New Zealand, we obviously have the pretty successful float there, Meridian, issued at $1, currently trading around sort of $1.09, $1.10. So a reasonable profit on the opening there for most of those sort of shareholders. Unlike the Mighty River Power, and it'll just be very interesting now to see how this sort of referendum goes. Interesting sort of case for the referendum because it's non-binding, so the government doesn't have to abide by any of the rulings and the results that come out. You already had 2 of the asset sales. It's unlikely they're going to be reversed. So really you sort of might just ask what the point of it is. But possibly it's a way for some of these frustrated Mighty River Power investors just to vent some of their frustration out there. The other big story has obviously been Chorus. That's come under a little bit of pressure after the Commerce Commission reviews on their costing, and now that really does pose some interesting questions for the ultra-fast broadband network here in New Zealand. And it'll just be interesting to see how that sort of pans out over the next sort of 3 to 4 months. Overall, though, it looks like New Zealand equity is obviously holding a reasonable bid. Certainly, the darling has been Xero. Issued shares around sort of $18, $19 up to sort of $22, $23 within 2 or 3 days. Broke through $30 quite comfortably. Hit $40 last week. Come off the highs a little bit, but certainly any sort of pullback in those shares, and quite a few investors are viewing that as a good opportunity to buy into that share. The other interesting sort of story out there is going to be interest rates. We're now looking like an interest rate increase here in New Zealand in sort of around the sort of March, April time next year. So if you do have a fixed interest portfolio, certainly a pretty good time to get that reviewed. If you bought bonds there on the secondary market, i.e. not when they've been issued, but after an issue on the secondary market, could have some major implications out there if interest rates increase, as normally that will be accompanied by a capital decrease in price. And so some of these bonds that you think are sort of trading and holding a reasonable bid, as interest rates increase, so your capital price will fall. So call us on 0800 867 323, or go to the website www.bayfinancialpartners.co.nz and get those fixed interest portfolios reviewed.